Hello traders, Mandla here at FX Link. Thank you for joining us on our market preparation videos. Today I'll be showing you my top-down analysis on the NZD-USD pair, which is also known as the Kiwi pair. If you have been checking this market with us, this particular currency pair with us, you would have noticed that last week actually on our market preparation video we identified our consolidation right here. Okay, the market has been moving sideways, as you can see right here. Okay, as the market has been moving sideways, last week we actually took a trade. Let me prolong this line over here. Last week we actually took a trade, which is a short-term counter trend trade. We actually took a short opportunity back at these levels of structure. Let me find my level. We actually took a short opportunity, a short trade back at these levels of structure, hoping that the market would actually give us a little bit of a relief back to these levels of structure before continuing up. And unfortunately, as you can see, the market stopped us out, gave us a higher high, higher close, right? Typically, a breakout or a higher close gives us an alert for a trend continuation move on either side of the breakout. In this case, the market broke out on the upside, so we'll be looking for a trend continuation on the upside. My trading bias would be I'll be looking for a buying opportunity as soon as the market retraces. Okay, mainly I'll be focusing at these levels of structure, this support level right here, and where the market actually formed a low back in the past right here. As I go to the lower time frame, I'll be taking a look on how will the market go to my targets. How am I willing to exploit that type of a move if it does go to my targets the way I want to. Typically, the market can go two ways to my targets. Okay, to our targets actually. Okay, the market could actually go straight up. As soon as the market opens right now, the market goes straight to those levels of resistance that we wanted to take profits at. Okay, or the market could, as soon as it opens on Monday, it could actually retrace back to our levels of structure, our previous resistance, and make a support level and continue up to those levels of structure. I will be looking for a buying opportunity actually at these levels of structure, so I can have a lower risk to reward as the market does come to those levels of structure. Okay, as we go to the lower time frame, mainly I want to answer the question of where and when will I enter, and how will my risk to reward be. If it is quite favorable, I will take that trade, a minimum of 1-to-1 risk to reward. I will take that trade. If it's less than 1-to-1, which means my risk is bigger than my reward, my potential reward, in that case I will actually leave that opportunity and I will not take that trade. As I said, I will be looking at particularly these levels of structure and these levels of structure for our potential long opportunity. Okay, again, we have our retracement, right? At this level of structure, we have our extension lining up at that level of structure. What do we have again, guys? We have previous resistance becoming support at that level of structure. Okay, mainly we will be looking for a retracement back at this support level of structure, and looking at our risk to reward, mainly you might be looking for a risk to reward which is like this. I'm setting myself up for this risk to reward, potential 76 pips worth of a move right there, and a 20 pip 24 to 30 pips worth of risk on this particular pair. Why? My logic of stop placement would be 10 pips below these levels of structure. So on this low, I'll take 10 pips right here from 81 to 71. That would be right here. So I would put it well below these levels of structure right here. Another opportunity you might have, as you know, the market is always right, so the market can actually stop us out and then reverse. Have you ever had that type of scenario happen to you before? The market stop you out and then reverse and goes back to your targets, and you'll be like, ah, damn, I knew the direction, but I just didn't get the timing right. Okay, as a trend continuation trader, you might be looking to catch two particular moves so you can never get missed on the trade. Particularly if the market does actually does come to these levels of structure, and then retest right away these levels of structure, you might not get missed, or you might get stepped out on the first test of these levels of structure. You might want to get in to another levels which were right at these levels right here. Let me take this and put it on the side. Right at these levels of support actually, and put your stops 10 pips below this low, which is at 41. We go back to 31, which is setting yourself up for a 41 risk and a 97 risk reward on this one. So as you would see that this type of reward, let me draw it out, this type of risk, what do you see, guys? Let me draw it out like this. Okay, on this type of risk, how much reward are you getting out? Let me clone it and see. Right, you get about 3 times worth of that reward while risking 2 times less.